The Reserve Bank doesn't shift on interest rates, but drops its bias towards a rate hike. Households to get cheaper electricity from the 1st of July, and tech giant Nvidia unveils a super chip that computes 4 times faster than what's currently on offer. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 20th of March, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Very busy, 24 hours or so.
Oh, it certainly is. And it's very odd talking to Gareth Aird, who is your guest today, is the head of Australian economics at Commonwealth Bank, talking to him in the middle of the month.
Look, it's always worth talking to Gareth any time in the month, I would say, Michael, though mostly it is after the Reserve Bank Day, and that's normally the first Tuesday of every month. Of course, they've changed their schedule, not holding as many meetings, and they had a meeting yesterday, the 19th of March. They didn't move on rates. We'll talk about that in a moment, but we asked Gareth what he thought of yesterday and probably more importantly, what he thinks is going to happen to interest rates.
Yeah, that is the main story this morning. The Reserve Bank yesterday left interest rates on hold for the third consecutive meeting, meaning the cash rate remains at a 12-year high. And it warned that it'll be some time yet before inflation is sustainably back in that 2 to 3% target range.
Central bank watchers hoping for hints that a rate cut might be sooner rather than later were left disappointed with the Reserve Bank board in a statement saying while recent data indicates that inflation is easing, it remains high and the path of interest rates needed to get price rises down remains uncertain. So the board isn't ruling anything in and it's not ruling anything out. So we're talking up and down. Economists did note that the bank, this meeting, left out a phrase. The phrase was a further increase in interest rates cannot be ruled out. Just the fact that they took that out suggests that any bias towards a rate hike has now been dumped. The Reserve Bank, true to pre-pandemic form at least, looks like it's moving in baby steps.
So that's the official statement from the Reserve Bank. Tell me though, Sean, the part that I love, what about the press conference after the release of the statement?
Well, it was full, and the Governor, Michelle Bullock, kept using journalists' names, and we journalists love it when the important person in the room uses your name.
An instant ego boost, isn't it?
Oh, totally. Yeah. And then sometimes what she did yesterday, she'd be talking and she'd refer back to a previous question, and, she would say, so as I was explaining to Michael's question, blah, blah, blah. Nothing better than that. When she actually remembers your name, not just in the moment of that question, but like 3 or 4 questions later, still remembers you.
Oh, she's actually a really good media performer, which I still think is for someone who hasn't had a huge amount of kind of media exposure over the years to be kind of thrust into this new position in terms of new to her in terms of being the governor and not just being the governor, kind of stepping up to that role, but stepping up to that role in the new era of the Reserve Bank and being required to front these press conferences and really delivering. That's pretty impressive.
You are what am I going to call it? A Bullockophile. You are a big fan.
I think I might be.
Yeah. There you go.
There you go. Anyway, I mean, that's two press conferences that have gone off pretty much without a hitch.
Yeah. I mean, I presume that you're not asking though how she performed or anything like that. You actually want to know some of the substance of what she was talking about.
Yeah, sorry, I do.
Yeah. So she clarified the change in wording that I mentioned a moment ago. She said it reflected that the economy is broadly on the narrow path. So it's more or less on the narrow path the bank thought it would be on. But the war inflation hasn't been one yet, and nothing can be ruled in or out. She said the board's aware of the per capita recession of the past couple of quarters, but the best thing the bank can do to help individuals is get inflation lower. Ms. Bullock said productivity is a long-run phenomenon and people shouldn't get too caught up on quarterly numbers, but overall, it is encouraging that productivity seems to be improving. When asked about house prices, she said they are very hard to predict and it comes down to supply and demand. And at the moment, demand is higher than supply. When asked about the proposed big jumps in aged care wages, she was fairly sanguine on that one. Not really a concern for the economy. All in all, everyone left the press conference looking pretty happy, I think.
Now, Sean, it's always interesting to see what local markets, what the share market does on kind of a day like that, where you have a very kind of fixed time at which something is being announced in terms of 2:30 p.m. What was the response?
Well, the market had been trading fairly flat and there hadn't been much volume yesterday morning. And then the RBA announcement came at 2:30. by the close, the S&P ASX 200 was up about 0.5% to 7,703 points. Best performers were the material sectors, including the big miners and the energy stocks. So we're talking about BHP, Fortescue, Rio, Santos, Woodside. They all did well. Goodman Group did pretty well as too. We may as well throw James Hardie and REA in there, just looking at the figures here. The banks tended to underperform, as did Wesfarmers, Telstra, Woolies, Coles and Xero. Bit of corporate news around, not a lot because we are post-earnings season, and so we've sort of had takeovers and that going on, but actual corporate news, there's less of it. One takeover that's an interesting one is dental clinic operator Pacific Smiles. It received a revised bid from Genesis Capital to acquire all of its shares at $1.75 a share, and that's 25% higher than the original offer last December. Pacific Smiles operates 128 dental clinics in New South Wales, Victoria, Queensland and the ACT. It employs about 800 dentists and 1,600 support staff. Now, it closed yesterday at $1.66 a share. It's being offered $1.75, so perhaps that one will get across the line. And New Hope's share price jumped 5%, notwithstanding it reported a near 50% drop in revenue and a net profit 62% lower for the 6 months to the end of January. It also cut its dividend. It had warned the market about that. That's why its share price rose rather than falling.
And what's happening in international markets?
Wall Street finished higher yesterday morning, boosted by tech stocks. Tesla hasn't had a good time of it recently, but yesterday it jumped 6%. It's still off about 30% this year. Alphabet also rose, up about 4%, means it's up slightly for the year. They're both some way behind the better performing tech stocks in the US. Nvidia, for example, it's up more than 80% this year. Meta's up more than 40%. In Japan, the central bank raised interest rates for the first time since 2007. While dropping unorthodox measures which it had used to stimulate the economy for more than a decade, the Bank of Japan shifted the benchmark rate from minus 0.1% to a target range of 0 to plus 0.1%. Yeah, not much, but at least it's a plus. As Tim Hext, who's a great fella, he's head of government bond strategies at Pendal, the way he put it, he said the last time the Bank of Japan hiked rates, there was no iPhone, no Bitcoin, no Uber, and no Instagram. Maybe that shows Tim's priorities there. I'm not sure.
That is amazing. The world has changed a little bit.
It has. It sure has. Oil prices hit a 4-month high yesterday as Ukrainian drone attacks on Russian refineries escalated geopolitical tensions. That's why we saw the Woodside and Santos's of the world rising. Gold prices are steady. Iron ore's holding above $100 a tonne for now. And the Aussie dollar actually fell after the rate announcement yesterday. It was trading about 65.5 cents. It's now just above 65 US cents.
All right. Plenty going on, Sean. We will be back in a moment with the rest of the day's business news. Sean, the majority of Australian households will get a cut in their energy costs from July 1, with some bills set to fall by 10%. This is good news.
Finally, some good news. The Australian Energy Regulator yesterday released its draft decision on changes to consumer price caps, known as default market offers. It's basically the most that a retailer can offer, can charge customers. The regulator intends to reduce the default offer by between 1% and nearly 10%. Small businesses are getting the biggest reductions. Energy bills in Sydney, the Central Coast and Hunter Valley in New South Wales will fall between 2 and 3% for households, almost 10% for small businesses. In South Australia, it's 2.5% for households, nearly 9% for small businesses. Southeast Queensland prices will actually rise by about 2.7% across both. In Victoria, the state's Essential Services Commission determines its own default offer, and it's proposing a 6 to 7% reduction for households and small business. So, as you put it, finally some good news from the energy sector.
It's a big day today in Canberra. Sean, the Chinese Foreign Minister Wang Yi is in town today, and he's going to meet his local counterpart, Penny Wong, in the first such meeting since 2017.
Yeah, certainly good news for those wanting Beijing and Canberra to be closer. Wang Yi will also attend an invite-only meeting with chief executives from the resources, education, health, financial and legal sectors. The national president of the Australia-China Business Council, David Olson, said the visit provides an opportunity to hear from one of China's most senior government leaders on how Beijing views its relationship beyond stabilisation. That's where we're at the moment. It's stable, but perhaps we'd like to go further than that. Wang Yi is also meeting former Prime Minister Paul Keating, of course, which there's been plenty mentioned over the past couple of days on that one.
I can't wait to see what Paul Keating has to say afterwards, because
Yes.
guaranteed we will hear something about it.
Totally.
Now, this is an interesting one, Sean. Aussie Broadband is taking court action to try to stop rival internet provider Superloop from forcing Aussie to lower its near 20% stake.
Yeah, so Aussie bought 19.9% of Superloop in late February. It then made a bid for the whole company that was rejected. Then earlier this week, Aussie said it had received a notice from Superloop instructing it to sell 37.6 million shares within 10 business days to lower its stake below 12%. The reason Superloop gave Aussie is that the purchase hadn't been approved by Singapore's Infocomm Media Development Authority. In response, Aussie filed an urgent request in the federal court for permanent and interlocutory injunctions to set aside Superloop's notice. It's getting very legal, just a little ugly, this one.
Oh, it certainly is. A little bit of drama. Now, independent directors at Boral has recommended shareholders reject a buyout proposal from the Stokes family's Seven Group, arguing it undervalues the company.
Seven's offered $6.05 a share, and the independents, who don't represent the interests of major shareholder Seven, quoted an independence expert valuation of between $6.50 and $7.13. Now, Seven Group holds about 72% of the company, but there are still about 42,000 minority shareholders in Boral. The Stokes family took control in 2021 and have pushed its strategy back towards Australia, away from North America. In fact, it's sold about $4 billion worth of assets from North America over the past couple of years. Now, Seven already owns Coates Hire Business, Westtrac Mining Trucks and Machinery, 30% of oil and gas group Beach Energy. Now, the independent directors on the board have come out and said, you're not paying enough. Not quite sure where it goes from here, given that Seven actually has 72% of the company anyway.
The owners of Kathmandu and Rip Curl will refocus their strategy on the local business and postpone plans to push into overseas markets after a pretty disappointing half year for the retailer.
KMD Brands said first half sales were down nearly 15%, with December and January tougher than anticipated. Warm weather and weak consumer spending were blamed for the drop, and pre-tax profit tumbled 67%. The bottom line was a loss, in fact. Kathmandu has a bias towards warmer clothing, so the upcoming winter period is pretty important for the retailer. And certainly the group hopes to improve not just its in-store sales, but also its online sales. At the moment, they're about 11% of direct-to-consumer sales. Direct-to-consumer sales haven't been too bad at Kathmandu, but then the wholesale part of the business, where you go into a supermarket, for example, and buy Kathmandu from one of the big supermarket chains, that part of the business hasn't been so good for KMD. The push into overseas markets has gone, shall we say, to a longer-term goal for the company.
Oh, that's a very nice way of putting it, isn't it? Now, Sean, some of the world's largest technology companies have been hit with notices from Australia's online watchdog asking for explanations for the spread of terrorist content on their sites.
The E-Safety Commissioner, Julie Inman-Grant, issued the legal notices to Meta, Google, X, Telegram, WhatsApp and Reddit. They're backed by tens of millions in fines if the companies fail to comply, according to media reports. Sharing extreme terrorist content, such as video of the 2019 Christchurch mosque shootings, is illegal in Australia. Inman-Grant said there was new violent extremist content, including beheadings, tortures, kidnappings and rapes, coming online, and platforms may not be identifying them quickly enough. The six companies have 40 days to answer the questions.
Employees of AGL, Sean, risk having their bonuses cut and performance reviews marked down if they fail to come into the office at least 3 days each week.
The policy, which puts the company in line with its rival Origin Energy and financial service firms including ANZ and Suncorp, comes as the Fair Work Commission investigates whether it should give the more than 2 million Australians covered by industry awards the right to request working from home arrangements. This would be an expansion of an entitlement currently reserved for a select group of workers designated under the Fair Work Act, according to a report in the Financial Review. Now, AGL's required office-based staff to attend the office at least 3 days a week since December 2022, but the company only recently linked compliance with this rule to performance reviews. Mandates requiring staff to attend the office at least a few days each week are becoming increasingly common, with 3 days a week emerging as the most popular minimum requirement, but the practice of linking office attendance to bonuses doesn't appear to have been widely adopted just yet.
Okay, turning to international news now, and we mentioned this one at the top of the show. Nvidia has unveiled new microchips that are multiple times faster at handling models that underpin AI.
Yes, Nvidia, already Wall Street's third largest company, hopes that the new chips will extend the group's dominance of artificial intelligence computing. The company estimates the chip industry is worth about $150 trillion. That's Aussie dollars, $150 trillion. The new processor design is called Blackwell and was unveiled at the group's annual developer conference. The Blackwell chips are made up of 208 billion transistors, and Nvidia says they'll be the basis of new computers in data centers around the world and will compute 4 times faster than the current Hopper chips. The company says that Blackwell will help drive the transition beyond relatively simple AI jobs, such as recognizing speech or creating images. It might mean generating a 3-dimensional video by simply speaking to a computer, relying on models that have as many as 1 trillion parameters, according to a report on Bloomberg. Absolutely amazing.
Intermittent fasting. How's this for a change of pace? A popular strategy to lose weight by limiting food intake to certain times is linked to a 91% increase in risk of death from heart disease, according to a new study. This is shocking.
It sure is. An abstract of the American Heart Association peer-reviewed study was released over the past couple of days. Scientists are still waiting for the full work. But basically, data from about 20,000 adults was examined. About half the patients were men. The mean age was 48 years. The fasting patients were more likely to be younger men with a higher BMI and food insecurity, according to the report on Bloomberg. They also had a lower prevalence of hypertension, diabetes, and cardiovascular disease based on self-reports, but obviously a massive increase in the risk of death from heart disease. The latest findings, subject to the release of the full report, pretty much call into question the long-term effects of intermittent fasting, which has been around for a long time.
All right, big show. Up next is the Fear and Greed Daily Interview. You're speaking today with Gareth Aird, Head of Australian Economics at Commonwealth Bank.
Yes, I am. All about yesterday's Reserve Bank meeting, what they said about interest rates, and actually what it means for when the next interest rate cut will be.
It is up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which, like the rest of us, has had a bit of a facelift. I suppose that implies that you and I have physically had facelifts.
We need, but we haven't had.
Important clarification, that one.
Speak for myself. Yep.
Yeah. Now, Sean, it's Wednesday today, which means there's a new episode of How Do They Afford That, our sister podcast that I do with Canna Campbell, who is the founder of Sugar Mama TV, a financial planner. And it feels like today's episode is actually custom made for you.
Right. What's it about?
It is the top 10 good money habits of successful people. Because you see people that have it all together in terms of kind of their, just basically their finances, and perhaps they're working towards early retirement or just kind of financial independence and financial freedom. And this is kind of looking at the habits that they have, the money habits that they have that are helping them to achieve those goals. And we put them into a list, the top 10, because I love a good list.
But are they much fun, those people?
Oh, I would imagine so. I mean, clearly I'm not one of them, but I imagine they would be great fun at parties.
They'd be great fun at parties once they're 55.
Yeah.
It's just between the ages of 15 and 55, you've got to put up with them not spending any money on food and drink and things like that.
Yeah, they're a lot more fun once the shackles come off.
Yeah, exactly. Yeah. I've been fun all my life. Okay, I'm going to die poor.
I'm poor and fun. Yes.
That's right.
Anyway, listen to this podcast and make up your mind and see if you want to implement any of these 10 tips. It's called How Do They Afford That? I'll put a link in today's show notes and you can find that wherever you listen to podcasts as well. Thank you very much, Sean.
Thank you very much, Michael.
It's Wednesday, the 20th of March, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.